Do you want to know the latest trends with mortgage rates? Do you want to find out what all the experts are saying and what it means for buyers and sellers as we head into the second quarter? Check out the next episode of Tom's Take right here to get all those answers. Welcome to Tom's Take. I'm Tom Toole. Thanks for checking us out as always. This week I'm going over a first quarter 2018 mortgage rate review to tell you exactly what happened with rates if you're thinking about making a real estate purchase as we head into the second quarter or beyond, and what that means for buyers and sellers. So let's go through the stats first. Rates right now, the end of March, they're coming in at 4.45%, which is off 1/3% from where rates were this time last year. But it's also up 0.5 percentage point year to date. So you can see rates have danced around a little bit. It hasn't been a straight line raise in where these rates are coming in, but rather up, down. There's going to be some fluctuation. More importantly, and this is really good news for sellers here, is that mortgage applications are up year to date from where they were last year. So the increase in rates, about 0.5 percentage point, hasn't affected people from wanting to borrow money. So that's really good news for sellers. And what these stats mean for sellers, we'll hit on that first, is buyers are now off the sidelines. They're not sitting on the sidelines like they were, waiting for the right home to come on the market, waiting for something to happen. They see that rates are going up, and they know that increase in rates is going to cost them more money. So if they see the right property, they're jumping on it. Combine that with historically low inventory levels, this really isn't hurting sellers in the market currently as of the beginning of April. What this means for buyers is that you see rates are going up. Now this 0.5 percentage point increase year to date since the beginning of January, that translates into $78 a month based on our average sale price of $330,000. So we're seeing really a difference of $2 to $3 a day. That's not a big jump. And what that tells me for buyers is that homes are still very affordable. These are historically low rates. So despite them going up, despite getting to the mid-4s for the first time since 2014, which is now 4 years ago, we're seeing that historically you're still in a good position to buy a home and have a very low rate. What I would tell you is, and what I'd recommend and what my past clients have found, is that you see that right property, don't overthink the rate. Think if it's the right home for you, and if it is, buy it and lock in a rate now. What I would also stress to buyers is make sure you are locking in your rate quickly. Rates are going up. I've seen some people make the mistake of trying to outthink the market. It almost never works out. You can see the trends. Rates are steadily increasing since the beginning of the year, and know that in order to lock in a rate the majority of the time without having to pay points, you need to be within 60 days of settlement. So keep that in mind when you're making offers and out there in the marketplace. So we covered a lot here. Any specific questions about rates, certainly ping us on social. Let us know if you want to see us cover anything in future episode of Tom's Takes. And to summarize here, good news for sellers, buyers are off the sidelines. Good news for buyers, rates are still historically low. Don't get freaked out by the change. Look at what's actually happened historically and know that we're not in those double digits rates that a lot of people saw in the 80s. I'll talk to you next week. Thanks for tuning in, everyone.